all in danger. I'm your technical trader. Today, I wanted to do a little deep dive into SPY and what I'm seeing in the charts that indicate a harder sell-off within the next month and a half. In front of you, you can see the SPY one-day chart, right? If you've been following me, you have already seen this trade setup and how I think this level at 443 is going to be a really strong level to look out for. Now, looking at the recent price action, I can see that we might have to create a range instead of that, and I'll explain why. So the level I found is by looking at the monthly chart in SPY, where you can see how I've done a full Fibonacci, right? So by using the top that we had back in 07 before the housing market crash, and then the bottom after the housing market crash, we can do a full Fibonacci extension where we have not been in the bear market since back then, right? So a full Fibonacci extension will take us up here to high as of now, a range in between the 443 level to the 450 level, depending on where on this wick you have the bottom. As of now, we have the very bottom, and then extended all the way up here to 450. The thing is that this market is in a very, very overbought condition. And usually when I do a trade setup, I look for one setup to put it on the radar, and then a second setup to make me interested in buying, and then a third setup that all occur around the same area to make me actually put on a trade. In this scenario, this is what made me put it on my watch list, right? So I was looking for a second reason to short. So now the second reason to short is what we like to call a time count. This is also on the monthly chart. A time count is when you have 7 of the same colored candles in a row, where number 7 will be the top or close to the top, right? We have 1, we have 2, we have 3, 4, 5, and 6, telling us that next month, if we see a green candle, it'll be a time count. Okay, what normally occurs during time counts is that the very last candle is bigger than the other candles, right? So we have, if we see a slight pullback this month in this candle and we close it out around the 440 level, we'll see an even bigger candle than that, because what they do is, when I say they, it's the market. What the market does is that it likes to take the people that have weak hands and don't understand the market patterns and take out their stop losses. So normally when people enter a trade, they will enter it hopefully around this level and then take out their stop losses in a fast, vicious movement, and then continue where it's supposed to go in the opposite direction and fall down. So what it'll look like is something like this. We'll see a slow move and then a hard spike to the upside, and then a hard sell-off, some small consolidation, and then a collapse down. So these fast and rapid movements that I expect is going to happen is what I look for in these trades, because that movement in itself is what we like to call a puke out or a stop loss hunt. And they're my third signal to enter a trade. So earlier, I've been expecting this level to hold. Now I'm looking for a stop loss takeout that could take us all the way up to 450. But the way I'll be playing this is that I'll be entering on my level, and then I'll be adding at the top, waiting for a pullback, and then have my stops set above this pullback. So for example, let's just imagine for a moment that that is our 443 level, okay? Then we'll wait and we'll see our candles play out and hit the level, and we will enter our short in here, like so. And we'll have an open stop loss. We'll wait for a pullback to happen, and once this pullback has happened, given us a topping signal, I will put in a stop loss above this opening signal, right? And then we will set our targets for lower, okay? So now, after we have entered a short position in this range somewhere and we find the topping signal, I'll enter my stop loss above whatever level it sold hard from, and then hopefully we'll actually get a fourth bearish signal by breaking the bottom of this rising wedge. Let's see, like so. We head up here, we see a hard sell-off, a little sideways. We break down. Normally what happens with these rising wedges is that we come back up and we back test this level, and then we come back down and we sell hard off, okay? Now, how low do I think this can go? As of right now, I have three targets, the third one being a backup plan, okay? So the first target is this level right here that you see at 383. The reason why we have that is because it's been proven to be support before, one of the stronger supports, and it will most likely be hitting these moving averages on the way down in this area, right? Second target is all the way down here at 340, simply because it was the pre-COVID high, and these highs tend to be tested at some point, right? It doesn't have to happen, but it has a really high probability of happening. Now, I gave you these two levels. Where's the third one? The third one is the backup one, right? So if we are in some of these levels and we start seeing what I like to call a bottoming signal, one, I'll alert you guys that are my followers. I'll let you know if I see a bottoming signal and I get out of this trade, and I'll actually make a video about it. These bottoming signals have different forms. It can be Wyckoff accumulations, it can be V bottoms, it can be engulfing candles, it can be bottoming tails. Normally, it's accompanied with some sort of news, and I'll look at the news and I'll analyze the data and I'll let you know what I see. To summarize, we have multiple reasons to take this short, right? That's what we traders do. We take the highest probability trade and we give it a risk to reward setup. Then we got to use risk management in case we're wrong, because there's always a chance that we will be wrong, and then we execute. So over the next couple of months, I will most likely be executing this trade, and I'll be talking you guys through what I'm doing, what I'm thinking, and how I'm seeing it. How you can use this is knowing that I'm going short in the market. I will recommend not buying any stocks over the next couple of months. Just wait it out unless you're a short trader. Shorting will probably be really profitable over the next couple of months. But I will tell you guys how I'm playing this and what I'm doing. So a fast summary, the reason why I'm taking this trade is, one, we have a huge Fibonacci extension that is coming into a close, which put this trade on my radar. Then we have an upcoming probable time count getting into this strong level, which is 2, right? Then the third, I'm looking for a puke out or a stop loss hunt. So a bigger, fast move to the upside that will collapse to the downside and then break this rising wedge for a fourth signal of a short, right? 4 signals is a guaranteed entry for me, not a guaranteed profit, but a high probability profit. So I would not stay in the trading game if I didn't take these trade setups. Hopefully, I can teach you how to do these things, and I'll show you what's going to happen. Please like and subscribe for more of this type of content. If you would like, leave a comment below on which stocks you would like me to look at, and I will make a dedicated video to that stock if you leave a comment. I don't have that many followers or that many comments, so the more comments, the better the video. Thank you for watching.